Hi there, Shingirai here again with an update on global current affairs. After the significant pullback that we saw in US equities towards the end of last week, we have seen some rebound and a bit of buoyancy in the equity markets on the first 2 days of this week's trading. Earlier in the week, last week, we had discussed some potential threats that we would have seen in the US equity markets, and of course, some of them have come to manifest as true, and one of those would be the potential second wave of the coronavirus outbreak. Despite news of this, a second wave of outbreak both in the United States and in China, where China has had to ground quite a couple of flights, US equity markets have maintained and showed some resiliency, and of course, in today's trading, US markets closed up about 2% by measure of the S&P 500 and the Dow Jones Industrial Index. But what we have to note here is that earlier in the year, the S&P 500 had managed to reverse losses that it had experienced due to the COVID pressures. But in the last 2 days of last week's trading, this has gone back into the negative year-to-date basis for both the S&P 500 and the Dow Jones. Asian trading today, Asia closed relatively flat, and that would see, of course, Euro stocks and FTSE 100 trading north in the green about 50 basis points. Some of the optimism that we see in the US equity markets is largely based on the testimony of Federal Reserve Chair Jerome Powell before Senate and Congress, which has given the market indication that perhaps the stimulus that we've been seeing in both the monetary and fiscal side in the US equity markets, of course, will not be of an emergency nature anymore, but more persistent in the long term amidst concerns around some more coronavirus weakness in a second wave outbreak.